Hi everyone, it's Daniel LB here from Jackson Capital. I am a proprietary forex trader for Jackson Capital in Melbourne, but I live in Brisbane, because obviously, as you know, with trading, all you need is a computer, an internet, and MetaTrader 4, and obviously a reputable broker whom I use, which is Pepperstone. Now, I'm also a student at UQ. I'm studying Bachelor of Commerce and Economics. I'm loving it, and today I want to share with you just a little bit of how we trade at the firm, and also to bust the myth oversold and overbought on RSI, because there's no such thing as oversold and overbought. Okay. Now, to start the video as well, I have to tell you the truth that I'm not going to show you 100% of what we do at the firm, because it's gonna be extremely unfair for people who have paid to be our trainees and training with us to become our traders. So if you're interested in becoming a trainee and take it seriously, to becoming a professional trader and working with us, you're more than welcome to contact me anytime, and I will show you how to do it. Anyway, so go back to the purpose of today's video is that I want to bust the myth of oversold and overbought on RSI. Now, I'm pretty sure that when you go online, you type in how to use the RSI indicator to trade forex, they will tell you the same thing. Hey, when the RSI is below 30, which means it's oversold, now you can buy. When the RSI indicator is above 70, it's overbought, now you can sell. Well, you can do that. See, the reason why they tell you that is because it makes everything so easy. Yeah, they want to sell their course to you, and you think, okay, if I pay the money, I'll learn that, I'm sure to make a lot of money. Look, if trading is that easy, everybody would have become a millionaire a long time ago. Okay? And let me quickly show you why you cannot sell it over, it oversold. So here you go. Let's say, I cannot go further to this side. Anyway, so let's say we are right here, okay? And you say, geez, it's oversold at the moment. You know what I'm gonna do? I'm gonna buy, and I'm gonna place my stop loss right here. Okay, seems like a good trade. But when you move further over here, you can see the market just made another lower low. Here you go. So you went in a losing trade. Okay, let me tell you something. You cannot buy there. You will buy, but not there. Later on, and I will show you where. Okay. So let's do it properly. First, I want you to connect this point to this point. Okay, I want you to focus on this section alone. Alright, so do you agree with me that the market was making lower low? You see it made low here, a lower low, and a lower low. Okay, so on the chart, it looks like the market is going down. But have a look on the RSI, and it's actually making higher high. See this? Low, high, higher high. So in trading, this is what we call divergence. Okay, so divergence is when, to put it in a simple way, when something going in the opposite direction. So in terms of price, it's making lower low, but in the RSI indicator, it's making higher high. And when the RSI indicator making high is telling me that the sellers are losing strength or momentum and the buys are coming in the market. Now, would I buy here? Never. Would I buy here? Never. Would I buy here? Never. See, the RSI indicator is not there to help you get in the market. Okay? You got to look at the RSI as a filter for you to not get in the wrong direction of the market. So, how do I get in the trade, Daniel? Good question. This is what we're going to do. Okay, let's delete all this, yeah? Let's start over. So, we know that RSI is making high here. So, when we look at this, we're going to say to ourselves, you know what? I am not going short. Let's look for opportunity to go long. Right. First, what we're going to do, let's mark some of the horizontal support and resistance. So we have the horizontal support here. I love using it. And we have another horizontal support here. Perfect. And right here, you can see the market went up in a violent way. What does it tell you? It's telling me that the buyers are stepping in the market. Now, do you buy here? No. Do you buy here? No. Do you buy here? No. We buy at retracement. Okay? So, put in a Fibonacci retracement. Can you see that the market reacted right at 50% and 61.8 retracement? And this is also a point of confluence. Okay, you can see the price is getting supported by three factors. Number one, Fibonacci. Number two, horizontal support. Number three, you have the bullish cross of 50 and 100 simple moving averages as well. Okay, you have an amazing and significant confluence, and you know for a fact that every single trader in the world is looking at it. And this is when you buy. You buy right at 61.8%, you buy 50%, it doesn't matter, just buy it. Buy. Put a stop loss here and let the market run for you. That's how you use RSI properly. Okay, my friend, have a lovely day.